G'day viewers, I'm Adam Stokes. Welcome back to the channel where tonight we're joined by our longtime friend Martin North of Digital Finance Analytics. Martin, how are you?
Pretty good. How are you going?
Well, I'm not exactly sure, which is why I wanted to bring you onto the channel to get some of your wisdom outside the crypto space, because we can see that these markets they're all moving in synergy. Let's zoom right out and talk about the global economy. Can you give us a synopsis of what's happening?
Oh, yeah, it's stuffed. Yeah. So look, the fact of the matter is that we've got central banks around the world who've suddenly woken up to the fact that inflation, which they for years and years and years said was transitory and will go away, isn't going away. And so now a lot of Western economies in particular, they're lifting interest rates. And that hike in interest rates is a complete turnaround in terms of monetary policy. And those higher interest rates are already feeding into higher corporate funding costs, higher mortgage rates. That's putting downward pressure on the stock markets. Now, a lot of people are now worrying that the central banks, particularly in the US, for example, could create a recession. If that creates a recession, then the value of stocks will go down even further. And so you've got this sort of downward spiral at the moment where effectively higher interest rates, risk of recession are there. And then, of course, just to overlay that, you've got some external geopolitical tensions. Obviously, Ukraine, Russia is not helping with the supply of oil and Russia. The China situation where the Chinese economy is still going weaker and they've got more lockdown issues with regard to COVID. And pretty much wherever you look, things are out of kilter, out of balance. And as a result of that, energy prices, of course, are a lot higher. That's stoking inflation further. And most people here in Australia are feeling it. Confidence, consumer confidence is down. It's down here in the US, down in the UK as well. So all of those indicators are pointing to difficulty ahead. And ultimately, it comes to this. Will central banks go on lifting interest rates to try and quell inflation? Or will they have to reverse course again and go back into the quantitative easing and stimulatory mode again, take interest rates down again to save the financial markets and to effectively pull the economy out of recession? That's the dilemma they face.
This is what I've been trying to consider, in the sense that what do we do? Do we raise interest rates? Do we print more money? Do we do both? Are we going into stagflation? I've tried to analyze this from so many different angles, but noting all markets are down. Going back a step, what do you think was the primary cause of this?
Well, I think the root cause was the 2008 global financial crisis not being handled properly, right? So since then, central banks took interest rates lower, did a lot of quantitative easing and printing money, as we say. And then, of course, when COVID came, they just stepped on the accelerator again and did more of it and probably overstimulated. The economy's bounced back quite quickly. But in doing so, we've got a mountain of debt. There's more debt in the world than we've ever had. We've got central banks with huge balance sheets. I mean, the Federal Reserve balance sheet hasn't really started to come back. The Australian RBA balance sheet is very big at the moment. So essentially, we have central banks who I think they think they've got godlike powers. And I think that they felt that they'd actually quelled inflation as a risk and knew precisely what they were doing and manipulating their levers and were expecting things to work magically well, but they didn't. And as a result of that, what we've now got is essentially the economy is out of whack. And then, of course, these externalities, and I think that the Ukraine-Russia thing blew up in February, March, but the inflationary trends were already going the wrong direction. We could see it last year, last September, October. It was clear that this wasn't transitory inflation. This was actually something more. And in fact, interestingly, in New Zealand, the Reserve Bank then lifted interest rates last November. So some central banks were seeing this much earlier than the Fed or indeed the RBA. So, but I think you can trace it all the way back to 2008 and the assumption that printing money was fine. Well, actually, no, it's not.
Peter Schiff, that you've had on your channel, I think a few times now, he was talking about, in a documentary I was watching, about kicking this can down the road. And in 2008, it seemed that we had reached the end of the road, but they've just kicked the can further down the road.
They've made more road.
That's exactly right. But now we're in the same situation.
We're actually in a worse situation because the amount of debt in the system is a lot higher than it was pre-2008, right? So we can do it again, but people need to understand, if you want to have the same effect as last time, you have to take interest rates even lower, so probably into negative territory, and you have to create even more money, which means it's not just doing what we did last time again, we have to do a lot more. And that's the problem. To get the same effect, you actually need a logarithmic increase in the money printing to get any impact. And we're getting to the point now where you can just go on printing to billion, but it doesn't necessarily have much impact. And that's the problem. So I think they've run out of runway. There was a wonderful cartoon which I saw with Jerome Powell sitting in a car, right? Sort of parked across a road and completely unable to move, right? And on one side was inflation and was on the other side deflation and financial stability. He was going, he couldn't move either way. That's how I feel about it now. Now they can try and do it again, but the impact, if they do, will just be to devalue money again. And I want to remind everybody, inflation isn't really an increase in prices. Inflation is the decrease in the absolute value of your money. So you need twice as much money to buy the same as you did last time. But the way to think about it is the value of that dollar is worth less today than it was last week, last year, and the year before.
Who's in charge? Is it the banks or the governments?
Interesting question. I think that governments have tended to wash their hands of this and say, we've got independent central banks, so it's their problem. The trouble is, central banks have proved that they are actually not up to the task. And whilst they are still weaselly wording things, and Jerome Powell says, well, we've got inflation, but we're going to get it under control, right? And Phil Lowe actually gave an interview last week on 7:30 saying, well, we did say that there was not going to be any interest rate rises until 2004. But, we did say subject to X, Y, Z. Well, nobody heard that at the time, right? So, they're trying to make excuses for the fact that they have stuffed up majorly. And I actually think that part of our problem is we've got central bankers who actually talk to each other and all think the same way. Under the umbrella of the Bank for International Settlements, they all have these sort of international connections. Now, some people would say it's even more dramatic than that. There's almost sort of a top-down directive. I'm not sure that's true, but it does seem to me that they think in the same world space and they think the same way. What that basically means is that we get the same stuff from all the central banks. And then the question is, what is the relationship between the central banks and the government? Now, what's interesting, if you look at the Council of Financial Regulators here in Australia, which is the sort of the curly bracket thing that sits above the RBA and Treasury and APRA and ASIC, on there, you've got Treasury and the Reserve Bank sitting together and talking about what they're going to do, right? And in fact, the Secretary of Treasury is one of the governors of the Reserve Bank. So how independent is the Reserve Bank is the interesting question. And I'll make the point that Jim Chalmers, new Treasurer, is now looking to do a review of the role and conduct of the Reserve Bank. And whilst the RBA wanted to do it itself with Treasury, so basically self-audit, Chalmers is basically saying, no, he wants something a bit more independent and objective than that. And I think that's a good sign. But to me, what we're really seeing is the Treasury and government and the Reserve Bank hand in hand, dancing part of the same tune, but actually then blaming each other for things not going right.
Martin, we've had long discussions about the future of money. I've been on your channel, you've been on mine. And I think where we see possibly this differently is the solution. So for me, the solution is Bitcoin because the fundamental cause is fiat. And it's not that I'm big about Bitcoin, it's about the antithesis of fiat is something that is completely open source, neutral and scarce. Whereas fiat is in many ways closed source in the sense that you said, well, who's in charge of it? We don't even know who's in charge. Is it the government? Is it banks? And I really like how you said that they're kind of pointing the fingers at each other, but I can't vote for a central bank. I can't vote for an RBA.
No democracy here, right?
That's right. And then we say, well, I'll vote for my government. But if they're not in charge, it goes back to who's in charge. So I say, well, let's remove all of this personal opinion about it and just make it a mathematical code. Now, Bitcoin aside, because I don't want to talk about it too much, if you were in charge, what would you do?
Okay, so I think there are three principles here. The first principle is that we do need some control and management of the way the economy works so that effectively there is a natural flow of investment into things that are really important. And I don't mean by that more money to go to housing. I mean that we need to put more money and more flow into the investment into business and to help businesses grow and develop. Because if you go back 30 years, right, 2/3 of bank lending was for business, 1/3 was for housing. Now, if you come forward to today, it's reversed completely. So you've got 2/3 of lending for houses, 1/3 for business. That tells me that the money is not going in the right areas in the economy. In fact, we're not investing in the things we need to be investing in, either in terms of infrastructure or in terms of helping businesses. So the first thing I would be thinking about is how you turn that around and actually get it to focus on the right things. The second thing is that banks at the moment are too speculative in what they do. So what they're doing is making big bets on derivatives and big bets on funding for housing, those sorts of things. And there used to be a thing called the Glass-Steagall Act in the US, which separated investment banking operations from plain vanilla banking. And that was a good thing because it meant that you got banks that were focusing on low risk meat and potato activity that actually made sense. And you had a speculative thing over there that wasn't connected. But unfortunately, now we've got the two things connected. So the second thing I would do is pull that apart, right, and say, no, we need to have a different approach in terms of our banking structure so that we actually can separate out the part of banking that's actually required for society and communities, and the rest of it can go over there somewhere. And just, if they want to make profits, that's fine, but don't contaminate this. And I think to add to that, and the way to solve that probably is to create a national bank, a bank that's actually set up for the people. So rather than having a commercially driven set of things where the only thing is to basically maximize returns to shareholders, hang the borrowers and hang the depositors, what you want is actually an entity that is effectively designed specifically to support the investment infrastructure, to support the investment in business, and then to effectively lay a foundation for a stable society. That's what CBA used to be. Before CBA was privatized, it was actually essentially a public entity that actually had a specific mandate. Now, I think that's probably another part of the puzzle. And then the final point is, if you have this national entity that actually has a mandate specifically to help economic development and all those things, that would actually change the game then in terms of the role of the commercial sector, because suddenly the commercial sector would have a very able and agile competitor that would be competing on a different basis. I think that would probably be quite helpful. Now, when it comes then to, and how do you do that digitally or not? Well, a central bank digital currency seems to me that it'll probably be part of the solution too, because it's quite convenient being able to use blockchains to be able to make instant payments and those sorts of things and reduce the friction of payments. So maybe they would also use the CBDC and the blockchain as part of the way that the plumbing actually works. But to my mind, that is an approach that could get us somewhere quite interesting. Now, that isn't anything like what a decentralized, devolved Bitcoin thing alternative would be, right? But I have to say, over the last 2 or 3 months, with the gyrations within the crypto community, I'm not sure, looking at the way it's working at the moment, that crypto or Bitcoin is actually decentralized, devolved. We've got too many big players now. We've got too many financial players in the system and, frankly, milking the system for all it's worth. Looking at hedge funds, looking at big investment banks, looking at some of these other entities that have been created, if I think of Coinbase and those things. I mean, they're big commercial entities now. So you cannot see crypto as this nice, simple, decentralized, devolved thing. It's not. It's completely contaminated with the same thinking as in the rest of finance and banking, unfortunately. So that's the way I see it, which is why I'm arguing for a different model.
When I've been talking about decentralized finance, evidently with what's happening, I guess over the last 2 to 3 months, we can see that it's decentralized by name and not by nature.
Yep.
But breaking away from this topic, and just to close off, I see Bitcoin still playing a part in the future, in the sense that it was really designed after the 2008 financial crisis. Because for me, I just see the core issue of this is money printing. There are so many different issues that we've discussed, and I think everything that you're talking about, I think we have to work with that, because at the moment we've got nothing. We've got nothing. Nothing seems to be changing. My concern is, just as an ordinary citizen, is that as you mentioned, 2008 is just happening all over again, but this time it's much worse. And there seems to be no major change. Now, a few months ago, perhaps even over a year ago, you and I spoke about the Great Reset. Do you think this is part of the Great Reset, either by design or by default?
Well, there will be people who will say that there is a conspiracy and there's this, group of people hidden away somewhere that's pulling all the strings and through the Bank for International Settlements and this, that, and the other. And, there's a complete plan. I have to say, watching how individual governments stuff up, the chances of being able to get multiple governments around the world to dance a particular tune in a particular way in a coordinated top-down way, I think is zero, personally. I think it's more likely, though, that there is a common set of groupthink, a common set of principles and behaviors that are actually is determining the way things are. And what I mean by that is there's a thing called neoliberalism, right? Neoliberalism is essentially say, leave everything to the markets, right? It's about the survival of the fittest. it's essentially about those who are more capable will win and everybody else will lose. I mean, that is what I see. And I think it's more a philosophy and an approach rather than a dictation top down. Now, where that leads us, though, is to a bit of a revolutionary step. Say, well, that's not working. Clearly, it's not working. So the question is there a better way? And for me, the Great Reset is not dictated top down. It's more about a realization that what we've got doesn't work and we have to turn it on its head and find something different. And so the democratization of finance and the idea that the finance entities are there to enable and support rather than actually dictate top down and drive is, for me, the fundamental switcheroo. That's what I would regard as the Great Reset. If you could empower individuals and communities to be able to make better decisions locally and to do things that actually provide better outcomes for them, then that will be a good thing. And by the way, if you take the concept of democratization to its end conclusion and think about blockchains, why don't we have not just elections, but why don't we have communities and individuals voting on individual items? You could empower democracy very powerfully, right? You don't have to have this centralized government where democracy doesn't really work, right? If you really wanted to push this, those are some of the things that I think could create a very different philosophical model for the way that things work. Now, that isn't the same way that a lot of people think, because a lot of people say, well, no, it's all going to be imposed top down. And well, maybe that's too hard. But the tools are there, right, to do things very differently with the blockchain and those sorts of things. And, why not try and find a different model where people feel more empowered and feel more part of the process? Because at the moment, if you look at the last election, there were a lot of people who really felt completely disempowered. They were forced to vote, but they didn't really care. Neither party was actually very attractive, so they did it because they had to, rather than because they wanted to get involved. So for me, there's some interesting opportunities there to create some rather different ways of thinking and different communities. Mind you, the politicians wouldn't like it. The central banks wouldn't like it because, of course, they'd lose control of what they currently have, which is always the issue. And a lot of it is about control, right? So central banks and central bankers only think control, as do governments. So the real democratization of society is what I'm talking about. And that's where I think that the Great Reset could come from if we really wanted it to.
I think that's the key point, Martin. The key point is that those at the top, why would they want to give it up? And to me, that is why there is no change. There is no change because, let's go right to the top. If you can print all the money in the world, why on earth would you want to give that up? If you could be a government and point to someone else and say, no, all this financial mess is someone else's problem or someone else's fault, why would you want to give up your position of power without any accountability or responsibility? And if you're in the banks and you have this unaccountable power where people can't vote you in or out, why would you want to give it up? And it's kind of like this mess of centralized power at the top. Now, as you said before, are they coordinated together? Well, possibly not, and more likely not, but their outcome is the same. If they maintain their position and they maintain their power, why on earth would you take steps to undo that power? And when it comes to the blockchain, I also agree. I think there's a big future in the blockchain when it comes to voting, whether that be on the macro or the micro. Everyone can see it. It will be in live time. It will be immutable, and therefore more people will feel involved. I want to talk a little bit about the markets because you're well versed on the traditional markets, certainly far more than me. I'm more focused on the crypto markets. Let's go into equities. How are they looking? What's going on there?
They look pretty sick. So the ASX is down about 10% from its peak last year, 13, 14 months ago. In the US, the NASDAQ, which is the big tech market, is down more than 30%, and the S&P 500 is down more than 20%. So we're in bear market territory, right? And the Dow, of course, is down as well. So equity markets were massively overvalued, particularly in the US, and that was driven very strongly by the tech sector because, of course, the techs live both in the NASDAQ and also on the main exchange as well. So a lot of the falls we've seen is because suddenly the valuations of tech companies are questionable. Now, there's two reasons for that. One is many tech companies aren't making money yet. So like Netflix isn't making much money. So they discount the value of those based on the cost of money into the future. So as interest rates rise, that discount is bigger, which means that the present day value of that stock needs to go down, right? That's one of the reasons. So a lot of it's to do with tech. And of course, we've also got supply shortages and we've got other companies that aren't able to maintain profitability as the cost of debt rises. So that's the second reason why those stocks are going down. So if you look at the price to earnings ratios of a lot of the stocks, And they're still extended. They're still way above where they should really be. But there's a few now beginning to look a little more likely of ultimately being reasonable value. And then, of course, the other factor is you've got high oil prices. So some of the resource sector stocks and commodity stocks are still quite high, and that's supporting some of the market. So point to make is you've got to look at granularity. You can't just look at aggregate levels. You've got to come down. So there are some stocks that are more overvalued than others. But I think the general trajectory is probably down. It'll probably go down a bit further. I always come to the view that September, October seems to be the point in the year, which is the low point for equities. So my own model is basically saying expect more weakness between now and then. What happens September, October time will be determined by whether there is a recession. If there is a real recession in the US, stocks will come down even more. And there are people saying, well, they're probably still overvalued and they probably need to come back another 40%. So we'll see. I'm not quite convinced of that. In Australia, stocks are not so far down at the moment, but we didn't get such a big extension first. But we are now 10% down. And we're going to see probably more weakness in Australia as well. So for the same reasons, interest rates are rising, cost of debt is rising, China's are coming off the boil. We export 35% of all our exports to China. Well, if they don't buy as much, then that's going to be a problem. So that's why I think there's weakness in the Aussie markets and pretty much all the other markets too. But remember that the US market is the market that actually determines outcomes in almost all of the Western exchanges. And, I always say to people, you've got to understand that whatever we might want to do here, whatever the US markets do, and therefore what the Fed does, they're the most critical forward leaders for what's going to happen here. So watch what they're doing. And they're worried about recession. There's a 30% probability now of a recession in the next 12 months. And one or two analysts are saying a 76% probability of recession in the next 2 years. So the US is looking quite weak, and that means more downside for equities.
It's concerning what you say about the United States. What I found is whether it's technology, social interactions, how we think amongst ourselves. It seems to me, after I lived in America for university, I went there a few times, and I always remember thinking, America's just like Australia, just a few years in the future. And when I was younger, it felt like it was 10 years in the future. Then when I was at university, it felt like it was 5 years in the future. And now it kind of feels like it's like 1 or 2 years in the future, but perhaps even closer when it comes to economics. So I think it's a very valid prediction that whatever's happening in America, it kind of trickles throughout the West, and we all feel that. And in many ways, as an investor, it can kind of help us make these speculative moves that if we look over the fence.
And I make the point too, things are happening a lot quicker, right? So the rates at which interest rates are being lifted at the moment is much quicker than a lot of people thought. And so that's the other thing. Things are happening more immediately. And that's partly because of the amount of leverage in the system. So if you make a small move on where there's a lot of leverage, it tends to have a bigger impact more quickly. So everything's happening in a more compressed time frame. That also means that you can't, a central bank makes a move on the interest rate, right? They don't necessarily see the results of that for 12 to 18 months. And yet now we haven't got 12 to 18 months. You've got to make the next decision in the next month or two, right? So they're actually starting to make decisions now without a compass. That's something else to bear in mind. So everything's happening so quickly. So that's one of the reasons why I think they're lost.
When it comes to precious metals, many of my subs have said, well, I can't put my money here or there for all the reasons that we've discussed about. It all seems to be in a free fall. What are your thoughts on the precious metals market?
Yeah, so precious metals are subject to a very big, and I would say artificial market. So if you look at the relationship between the underlying, in other words, your bar of gold, there is a 1 to 50 relationship roughly between that and all the various gold contracts, futures, options, and everything else, which means that most of the price action is not actually in the physical market, but it's actually in the derivatives markets. And there are a lot of players with very big positions who are protecting their positions up or down, depending on where they are, using various contracts, the futures contracts, the options contracts. And what that means is that it's a highly manipulated market. So the old theory was that gold was a hedge against inflation and would go up dramatically when things were, looking pretty bad. Well, it hasn't behaved like that at all. It hasn't dropped dramatically. It's just slightly higher than where it was previously. The reason for that is that you've got to look at the derivative structures and the way that all of those big players who hold massive amounts of derivatives are managing the price and managing the risk. So I would argue that silver and gold are both fundamentally managed prices, which means you can't just assume that they are going to be perfectly safe. Neither can you assume that they're going to be a natural hedge against inflation. Now, they may hold their value better than some other assets if there's a really big downfall. But you can't eat gold, you can't eat silver, right? You got to convert it back to something if you want to actually do anything with it. And that's a problem because the exchange rate is manipulated, and it'll be continually being manipulated. And in fact, more recently, more people have hopped back into the gold and silver and commodities baskets because that's where they think maybe some of the, the hedges and things are. In fact, I think oil is about the only commodity, or maybe wheat too, few commodities where there has been a price move up. But I'm not sure that precious metals is behaving anything like many people would actually expect it to behave. Neither do I see it as a natural hedge against inflation currently.
That's unfortunately very alarming because, yes, I've been stocking a little bit of gold and it's just not performing. And I think it's not about getting rich, it's just about protecting your money. But when you actually factor in the cost of buying and moving and storing and insuring gold, it doesn't really perform like they promised us.
No. Well, I'm afraid that I've been saying that for quite a few years, and a lot of people hate me for saying it because, a lot of people say, oh, I'm holding gold, but at least I've got gold. It's always going to be there. Yeah, maybe, but, just be careful. Just be really, really careful because, unfortunately, people don't understand the relationship between this one-to-many between the underlying and the derivative markets. The derivative markets, which are owned by the big investment banks and hedge funds and large players, they're basically taking advantage of ordinary investors, frankly. They are just backing their particular positions and making sure that they get the right outcome, never mind everybody else. That is unfortunately an outcome of the neoliberal philosophy that we touched on earlier.
This leads us to the big markets, particularly in Australia, which is the real estate markets. Yep. We can see that on mainstream, they've been saying that there's going to be certain drops, but during our previous discussions, we've spoken about markets within markets. There is not a real estate market. There are real estate markets. Let's start in Australia and then expand out a little bit. What's your take on the real estate market?
Yeah, so we know ultimately property in Australia is overvalued by something like 40 or 50% relative to long-term trajectories looking at debt to GDP or debt to income. The average new loan is a debt to income ratio of 6, 7, 8, 9 times at the moment, particularly in Sydney and Melbourne. That's way too high. It should be 3 times. We've had a run up over the last 18 months because interest rates were cut to bilio. The banks were very happy to receive very cheap money from the Reserve Bank and they lent it on, and they cut their lending standards again to bilio to be able to actually pump their businesses up. 65% of all lending in Australia is for housing, right? That's way too high. But now we're starting to see the cracks beginning to appear. It varies in different markets. Apartment markets are falling through the floor in some areas already. Housing is also going off. And Christopher Joy, who's one of the more bullish to property, is now saying he thinks that property could be corrected to maybe 30% if the Reserve Bank continues to lift rates, as they may well. I'm certainly seeing in my modelling and my analysis some falls in some areas. It varies, but there's no chance of getting another 20 to 30% rise like we got over the last 18 months. That was a complete aberration. That was driven by all the money printing, ultra-low interest rates, and all the stimulus. That was not real. And so we've got this spurious wealth, which means that ultimately the chances are real estate's going to go sideways at very best, down. And by the way, no migration, of course, at the moment. Migration may act as a little bit of a floor in some areas, but then we're losing first-time buyers. The new stimulus package is probably coming through to try and help. First-time buyers can't get in the market, it's too expensive. And a lot of people who bought in the last 18 months are now seeing their interest rate rising, their mortgages, which means that their mortgages are now unaffordable. So they're now struggling to deal with that. And the average mortgage was 15% bigger this year compared with last year, 15%. And for every 1% mortgage rates go up, that translates on average over a 30-year mortgage to a 15% increase in monthly repayments. So it doesn't take you much to see how things could go bad quite quickly.
These are very, very concerning numbers, particularly as there are so many Australians who want to buy a home. If we extrapolate this out to the global markets, are we seeing the same pattern?
Yeah, so, the US was strong. It's coming back a little bit. The latest home building stats were falling. Mortgage rates in the US have now moved up to about 6%, which is double where it was just a few months ago. That's putting a real break there. Same in the UK, where we're seeing, again, property prices beginning to turn as rates come up. The UK is probably the closest to a recession in the Western economies. They're talking about inflation is 11% in the UK now, which is pretty dramatic. And some of the European markets didn't have the same bubble up in property prices. They've got a higher rental sector, but we're seeing some issues there too. So pretty much all of the Western economies, we're seeing the same sorts of issues, more or less. Canada's very close to Australia. Canadian prices are falling on that. I'll also make one other point, that the real estate sector in Canada and Australia has been used for massive amounts of money laundering for a long time. And one of the reasons why we had a big spike up was money laundering. That's looking as though that might actually now begin to ease back, partly because people are aware of it, but also because when prices aren't bubbling up, you don't get the same value. So, by definition, it dissipates a bit. So there's a lot of things going on, but there are so many parallels between Australia and Canada and the UK and the US. It's all looking quite similar.
I actually hadn't heard that before. How are they laundering money through real estate?
Well, basically, they can get money into a country through various nefarious means, then go buy property, and through that purchase, effectively, it becomes legitimate money, and they hold on to it. And as the property price goes up, the value increases, then they sell the property and then release it, and then it's kosher. And it's interesting, Canada's had a huge issue. One of the reasons why Vancouver prices are so high is because of the money laundering. And they actually have done a number of reports on a number of pieces of initiative to try and solve that problem. So money laundering is a big, big real estate related issue.
Which leads us now into the most important issue, food. So the President of the United States in a press conference some time ago said that we should be expecting food shortages. Do you think that this will flow out to the whole world?
Yeah, unfortunately, I think we are going to see continued supply chain disruptions. Now, we are fortunate in Australia because we do actually grow quite a lot of our own food, which is good. But of course, quite a lot of it then is exported. But even so, we're getting shortages now. Like, you want to get lettuce, got to pay $12 if you can get it. And in fact, if you want an iceberg lettuce, forget it. So we're already seeing sort of small examples of that. The main problem at the moment is in developing countries where grain prices, if you can see them, have doubled, tripled, and people just can't afford it. So there are lots of people starving, millions and millions of people around the world already in great difficulty. But even in Western countries, my expectation is that we're going to see ongoing supply chain disruption and ongoing difficulties with getting even some basic foods. One of the things I've been saying for some time is if you've got a veg patch, start planting it, right? You're going to be finding that's really helpful, not least because it's going to be cheaper to grow your own carrots than buy your carrots, right? But there are real issues. And I guess the other point here is that the thing that a lot of people haven't woken up to is that, we talk about the issue to do with global warming. A lot of global warming is created by methane. A lot of that methane comes from animals, particularly cows. So if you really wanted to deal with some of these supply chain issues and food issues, right, what we need to do is to change the way that we actually farm and grow things, which would actually have quite an advantageous effect because it's very inefficient actually having cows eat grass and then convert that into milk or meat, and then we actually kill the cow. It's a very inefficient way of actually providing food. So maybe there's an opportunity in all this to think differently about our supply chains and our ecosystems and how we actually feed ourselves.
One of the sayings that's very concerning to me is that we're only 9 meals away from a war. That is, when people go 3 days without food, things start to get quite unstable, shall we say. Does global security concern you from an economic perspective?
Yeah, I think it does. You can see Sri Lanka, right, as an example of a society that's falling apart quite quickly. And that's partly because people are, finding it very difficult to get enough food. And we are very thinly veneered. With society is very thin, can fall apart quite quickly. The floods actually, in a way, show that, didn't it, down the East Coast? It didn't take much to sort of create mayhem or the bushfires previously. So I think we need to understand that society as we know it is a very fragile flower and it can be easily upended. And some of the international geopolitics and some of the international stuff that's going on at the moment has the risk, I think, of tipping us into some remarkably worrying conflicts. I mean, the Russia-Ukraine thing is bad enough, but that could easily flare up. We could actually see, NATO being pulled into stuff if not careful, and then somebody chucks a nuclear bomb one way or the other, and you could see the whole thing going pretty bad. We are very close, I think, to the edge. And by the way, the other point to make is that we are very large numbers of people in the world too. The population is probably bigger than the world can actually accommodate at the level at which we eat and live. So, we are if I stand back, we're at the boundaries of so many different things. We're at the boundaries of the climate. We're at the boundaries of our food supply systems. We're at the boundaries of some of the economic systems. And this, to me, has all of the hallmarks of suggesting that conflict and disruption could be significant. So I am concerned about all of those things. And the problem I've got is that, and in fact, the lady in charge of the UN said quite recently, the problem is governments and societies can't manage multiple things at once. We sort of fix on one thing and then the next thing and the next thing, right? So we spent 18 months to 2 years on COVID. But actually, that's not the real world. The real world is we have got multiple things we've got to try and balance. And so we're not very good as a species at managing these multiple things all together at the same time. And yet that's what we've actually got to try and do if we're going to try and steer ourselves towards a successful and bright future, which is still there if we want to steer it in the right direction. But the risks are we're going to blow ourselves up, or we're going to be blown up, or we're going to starve, or whatever. I mean, all of those risks are real, I think.
This is probably I was going to say a good segue, but it's kind of a depressing segue. We've spoken about the state of the global economy, markets, equities, precious metals, real estate, food, inflation. Ultimately, Martin, what I really want to know from you, my friend, is what's your biggest concern in all of this?
I think the biggest concern is that nobody trusts the government, nobody trusts the media, nobody trusts anybody. So I think the trust deficit is actually probably the biggest thing. So, you can hear stuff on the radio or on the TV or on the internet, where you can go online. And the point is nobody knows where the truth lies anymore. And that means that you are subject then potentially for massive manipulation, because he who shouts loudest can actually manipulate you in a particular way. And that and morality. So politicians have no moral compass generally. In my view, they will do whatever they do because they want to maintain power or whatever. So lack of morality and the lack of really knowing where truth lies, for me, are the two biggest fundamental philosophical problems we've got. The rest of its manifestations of that. So that's why we have issues in the economy. That's why we have issues, politically speaking, and in the supply chains as well. But those are the fundamental values. And it comes back to a set of fundamental values about what's important and what do we value, and almost the big philosophical question, well, why are we here in the first place, right? So that's where you come to, right? Ultimately, is it really to maximize the profit and value for a few percent of the population? Is that really what this is all about, right? What is society for? Or is society there to try and maximize the potential for each individual and each person in society, and try and help society grow and develop and balance? And that's the really philosophical question here. At the moment, what we've had in the last 20 or 30 years is the really rich get richer and richer. And of course, you've got a few of the billionaires now building rockets to be able to go to other planets because they don't like this one much, right? That doesn't feel right to me in terms of actually a way forward. I would like to turn the whole thing around and say, well, hang on a minute, what is society all really? Seems to me that society is more about enabling individuals and communities to achieve the best that they can achieve. And then we build the rest of the society and the economy around it to enable that to happen, which turns the whole thing on its head.
Do you think that lack of trust and belief in our political leaders and the media is justified?
Yes. They have no moral compass. I mean, the last prime minister and his mob, how can Josh Frydenberg 3 months before we've ended up looking as though rates are going to have to go up because we've got such huge inflation problems, claimed that the economy was perfect. Everything was wonderful.
Exactly.
Our economic plan is working. Well, there was no economic plan. That was just bullshit. Or how can Michael Zucker keep saying, yeah, rates are really low, buy property. We're encouraging people to buy property when they were buying into property at the top of the market with huge risk. I mean, wherever you look, or look at the energy problem. Well, that energy problem just didn't jump out the woodwork, right? The energy problem has been 20 years in the making because of no good policy decisions. Or look at the way we didn't respond to China appropriately. I mean, wherever you look, it's massive policy misfire, in my view. And that was because of an arrogance, and that was partly because people had a particular ideological view of the world which wasn't right. So, yeah, I'm afraid that, they're reaping the whirlwind. I look at Boris Johnson in the UK, right? He got a vote of confidence the other day, but actually there were more people voting against him than when Theresa May was voted out a few years ago. She was the previous prime minister. So there's something weird about the moral compass that just isn't working anymore. So I would love to see real morality coming back. I would come to see real proper values coming back into society, because if we're going to survive and thrive, that's what we need. At the moment, it's not fit for purpose.
This is very powerful to me, Martin. For the viewers out there, if you don't realise, Martin's got a very deep philosophical background, and we've had a video in the past where we just spoke about philosophy, and we can see how these actually intertwine, because philosophy and economics and human behaviour and money and where we move, they are in fact all linked. And what's very powerful about this for me tonight, Martin, is that we're from different generations and we have different outlooks on how we think we should move forward. as I mentioned before at the beginning, I'm still very much decentralized, immutable focused. But in any case, we both agree that what's happening at the moment is not working, and the lack of trust in both the media and the government is justified, which leads me into seeking the truth. What my mission is on my channel is to seek and expose the truth. I don't pretend to know more than the other person, just simply I think I have more questions than the average person. Where do you get your truth from?
Well, so I'm a philosopher, right? And a philosopher is trained essentially to ask the next question all the time. So when somebody makes a statement, I try and get behind the statement and say, well, why did they say that? What are the assumptions that they're making? What's behind the statement? So it's a second order science. And what you go on is you go on asking those questions to say, what's really going on here? And that, on DFA, that's what I try to do. I try to actually take the conversation a bit deeper and a bit further to try and actually understand what's really going on. Now, I don't propose to propagate a particular set of solutions. What I'm trying to do is help people realize that it's okay to ask these deep questions. Because a lot of the time, what I find is that people are scared to ask these questions. They know things aren't quite right. They know that it doesn't feel quite right, but that's all they don't take it further. And I'm trying to encourage people to say, well, ask the questions, step one further into it and begin to try and understand what's going on. What frame of reference, to use a philosophical term, what frame of reference are you operating in, and how is the world really working? And if there's a difference, that might explain something, right? Because quite often how the world actually works and how the world is perceived to be working by many people is not the same. Now, once you've got that, what you can then do is to say, okay, well, what are the fundamental propositions then that would actually determine, right from wrong or whatever you want to do? But you've got to start by coming back, breaking it down, first of all, and saying, okay, what are the basic assumptions that is driving the way things are working at the moment? And that's what I try to do. And from there, you can begin then to distill a reality that is closer to what is actually really going on rather than actually what you might be hearing from the mainstream media or other people. Remember, the mainstream media has their own philosophical point of view that they're pushing all the time. Many YouTube channels will have a particular philosophical point of view that they're pushing too. Now, it might be right, it might be wrong. The point is, though, they all have, like it or not, a particular worldview that they're actually inhabiting and connoting, right? What you need to do, if you're a listener of that, is don't swallow it whole. Ask your own questions and compare and contrast and begin to actually, in a mature way, begin to think about this. And what I sometimes say to people, Adam, is it's like a adult to adult relationship rather than adult to child relationship. I think that we're being treated like children by a lot of what's going on.
Absolutely.
And almost don't ask that, just carry on your little down in the middle merit. What I want to do is to encourage people to have an adult to adult discussion about these things. And you may not agree or disagree with what I'm saying, but if you listen to it and think about it, maybe it will help you to come to a better realization of whatever it is, right? That for me is a mature adult way of dealing with it. And that's what I'm looking for, because that is where you find truth ultimately. But if we're just treated like kids and being told to do this, don't do that, whatever it is, whether it's some, health or whatever, right? Then effectively we are debilitating ourselves and becoming devalued and effectively ending up more like, half a person rather than a full person.
I think this is where diversity comes into it. There's so much focus on diversity of people's skin color or their genitals or sexual preference. But what I really seek is diversity of thought.
Yeah.
And if you and I have the same skin color, that doesn't necessarily mean we think the same. And conversely, if we have a different skin color, doesn't mean we think differently. But without the opportunity to debate, and noting that so much debate is being shut down primarily and firstly in university, then in the media,
Yep.
and then we have this censorship. It's almost like we're regressing as a society, because if you look at the history of humanity, this goes back to philosophy. In my opinion, it really started to expand when the philosophers came forward and started to debate in open forums, very deep and very powerful concepts and thoughts and ideas, but they were able to debate them without repercussion. They weren't cancelled, if you will. They weren't hung. They weren't persecuted. It actually became almost like a sporting match where these great philosophers would come together in front of an arena of people, of open-minded people, that is, to say, look, this is the pro, this is the con, or this is my thought, this is your thought. Let's debate it out. How do we get back to that?
Well, you have to want to do it. First, you have to be open-minded. You have to realize that just because somebody has a different point of view, that doesn't make them right and you wrong, or you wrong and them right, right? So it's trying to get to the point of, well, like I said, being an adult and recognizing that actually it's worth listening to what other people have, even if you have a point of view that's different from them. You may learn something, right? You might actually be able to actually develop a point of view that's actually, more informed. But that's a pretty sophisticated way of thinking about the problem. Many people find that really challenging, right? Because it fundamentally questions stuff that they've always assumed to be true. This is really uncomfortable stuff. And if you really want to do philosophy, it's not easy, it's not straightforward. But if you can actually go through the process and realize the relativity that we're talking about here, there isn't a single one definitive right answer that you've got everything right and everybody else is wrong. That's not how the world works. But that's a very, very different world from the world of politics or the world of economics or the world of central bankers who all believe that they know precisely what to do and, spend all the time on transmit rather than on receive. And that's another point I'd make. Part of what you have to do is listen. There's a lot of people who only ever go on to transmit and never listen. I think that listening is actually as important as transmitting.
Powerful stuff. To wrap this all up, the number one question I get from all of my viewers, of which I don't have the answer, and it's a question I've been presenting for many years. Martin North, where do you put your money?
Well, I went to cash at the end of last year. The reason I did that was because I was expecting the stock markets to go down, and I have expected that to play out over the next few months. I'm looking at parallels between now and 1929. And in the Great Recession, a lot of people made a lot of money by being out of the market before the market dropped. And then they bought distressed assets later. So that's what I'm doing. I don't hold much in the way of metals for the reason I described earlier. I am still in the banking system at the moment because I don't believe that the banks will just fold. Some people do, but I don't. So I've tended to go there. And I'm waiting to see how this plays out, because you need to take the long game. I'm not a trader, I'm a long-term investor, but at the moment I'm out of the market pretty much, waiting for prices to continue to come back to a level at which I think they might then be worth buying again. So that's what I'm doing. And I haven't lost much because I've been out of the market since the end of last year.
It's funny you should mention the banks, because I was talking about holding some cash reserves for those reasons of, being ready to deploy these assets when something becomes available. And when I was talking about the bail-in laws, where of course we've discussed this when we're talking about the cash ban and forcing people to put their money into the banking sector in case a bail-in law is enacted. Ultimately, I agree with you. Particularly in Australia, I don't think the banks are going to fold yet. I don't see any signs that they're going to fold. However, it can't hurt to have a little bit of cash on hand, because if there was something that happened where, as we've seen, particularly in the crypto markets, where suddenly decentralized platforms just shut their doors overnight. We have seen this with banks. We have seen them where, even if it's a technical issue where the ATMs shut down or the internet servers are shut down. And we saw this with the floods as well. In the floods, we saw that some people couldn't, in fact, buy any goods. And luckily, we had community in that situation where people were essentially writing IOUs for milk and bread or whatever goods and services they get. So, I mean, I don't really have an answer for it either. I'm really searching for somewhere to put my money, but at the moment, I think investing it, there are just no opportunities.
I agree. And sometimes being out of the market is better than trying to find a place in the market, right? And I agree with you also that you've got to assume, I sometimes say to people, what happens if the power goes off for a week? Would you still be able to survive, or would you effectively, how would you cope with that, right? So have you got enough provisions, that you could actually do that? And have you got a small stash of cash somewhere that you can get access to if you need to, assuming the ATM network wasn't there for some reason, like lack of power or whatever it was, right? And assuming that your plastic didn't work because the machines don't work because the network's down. I mean, I don't want to be a prepper exactly, but I am saying it's worth thinking that through, right? It's just worth thinking about what happens if.
It's hilarious that you actually mentioned prepping, because in the past, there's so much commentary around prepping where those who seemed crazy is probably a bit of a hard word, but maybe paranoid is probably a softer word, about prepping. In fact, perhaps they saw something that the rest of us didn't. And I, by default, prep. I prep my body. That is, I remain fit and ready to move. I've got some provisions. If I can't access cash, I also have provisions that I could use in the barter economy for trading. And the worst case scenario is if I've got some water in the garage and I don't use that water, well, I've got some water that I didn't use. But it's better to have it and not need it than to need it and not have it.
I agree. And I'm a bit the same.
Martin, I've really enjoyed this. If my audience want to learn more from you, how can they get more Martin North?
So I run a YouTube channel called Walk the World, and I do daily shows on finance and property and philosophy and all those things. There's a blog at digitalfinanceanalytics.com, and I'm DFA analyst on YouTube.
Martin North of DFA and Walk the World, thank you so much for joining me.
Enjoyed speaking with you. Take care.